Hello everybody, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Virus Turns. Today is April the 14th. I am Randy Patrick, your host, putting the realism back in real estate. Hope things are going well for you. Hope quarantining life is working and everyone's sort of safe and had a good holiday weekend, etc. So it's tough these days. I know it. Things are changing every day. There's different news. The market's changing, stocks, housing, whatever. We hear so much information out there. It's tough to digest everything. Today I'm actually going to speak on one subject. It won't be a very long video. I came across an article that I think was very appropriate to review. We're going to talk about forbearance facts today. I've seen some of the comments and some of the, I guess, people expressing their opinions about the fact that maybe I don't know what I'm talking about. Normally I don't care and need to respond to people in this way because really I don't care. But the point is, if there is confusion, I'm going to, and this article was timing was great. That's why I'm going to go over and review it so people can look at it for themselves and understand and make the right decisions, whether for their business, for their personal life, finances, whatever. That's a scoop. Oh, and by the way, too, I've created a Facebook page. It's called Housing Bubble 2.0. Yeah, kind of like the channel here. I want to make it very clear that I'm not abandoning YouTube medium at all. This is the primary medium. The point of actually having a Facebook page is that I can take more questions that way. I can do different trainings that maybe aren't appropriate or not fit for this medium. When I do a YouTube video, I want it to be impactful. It's usually news or on a big subject. A lot of stuff I can handle through the Facebook opportunity, and also doing live, broadcasts and things like that. That's why I created that page. I have a number of pages, so some of you don't like that. I apologize, but hey, you know what I mean? There's still a lot of people on Facebook, and what I'm looking for is some more people to sort of follow Housing Bubble 2.0, like it, follow it. When I get to a critical mass, I can start doing some trainings and some more stuff on that medium. So again, remember, you're not paying for it, okay? It's if you've ditched if you want it, you can create an account or just click on it and like or follow the page, and no one's asking you for any money at this point in time, okay? So it is what it is, all right? So anyway, let's talk about this. So this article came out the other day from MarketWatch, basically about forbearance. And I've got a lot of experience in this personally with respect to my clients and what happened over the last housing crisis. So I just thought it was good to review this article. So this is the only thing I'm talking about today, number one. Two, you can get this, you can look at this yourself. The link will be in the information section of the video. And if you think I'm misleading you or I don't know what I'm talking about, then you take it up with who's writing the article, okay? Simple as that. So basically, forbearance is a hot topic because there's a lot of misinformation, miscommunication, misunderstanding about this concept, all right? So the CARES Act stimulus package requires servicers to provide forbearance, which is a temporary postponement of payments, so a temporary postponement of payments to any homeowner with a federally backed mortgage. So Americans with other mortgages may also be able to receive forbearance at their servicers or lender's discretion. So when the government says we're going to implement forbearance and things like that, they're talking about mortgages that they back, all right? So please keep that in mind. And to talk about the volume, well, here's some recent results. Forbearance requests have poured in. The requests grew by almost 1,900% between March 16th and March 30th, according to a recent report from the Mortgage Bankers Association. And before that, the previous week, from 2 weeks from the 2nd to the 16th, it was 1,270%. So it is growing. It's going to be popular. People are going to take advantage of it. That makes sense for themselves from a financial perspective. So we have to understand that's going to happen. All right. So if you're eligible for this and you need the help, take full advantage of the program. But similarly, if you don't need the help and you can pay your mortgage, don't try and game the system and make it harder for people who really do need benefits, access to this benefit that's out there. Realize that, and this is for those who have yet to get a forbearance agreement, this is what it's all about. So forbearance is not forgiveness, all right? To be clear, mortgage borrowers will still need to pay off their loan eventually if they receive forbearance. They don't wipe out the money. They don't make your payments disappear forever. You're going to have to pay it somehow, some way, in some format once the forbearance period is over. All right, so forbearance is not forgiveness. You still owe the money that you were paying. It's just that there's a temporary pause on making your monthly payments. All right, let's make sure we all understand that. Now, first of all, you need to know who your servicer is. So struggling homeowners won't automatically receive forbearance. You need to request it from your servicer. There are some servicers out there that are automatically putting it on client statements and having them call in to opt out of it. So just again, what the warning is, take a look at your statements, be aware of what's happening. They shouldn't be putting you in automatically, though I know some of them will probably do that. So mortgage servicers are the companies who receive your monthly mortgage payments. A mortgage servicer may not be the same as your underlying lender. Please keep that in mind. All right, how do you know if you qualify? Well, one, to qualify for forbearance, a borrower must have a mortgage backed by one of the following federal agencies: Fannie Mae, Freddie Mac, FHA, which is the Federal Housing Administration, the U.S. Department of Veterans Affairs, the VA, U.S. Department of Agriculture, USDA. All right, and there you go. So that's number one. If you don't know whether your mortgage is backed by anybody, like Fannie Mae and Freddie Mac both have websites. You can check whether your loan is backed by one of them. Basically, half of the mortgages in the U.S. are backed by Fannie and Freddie. You go to their websites, you type in probably your loan number. It's going to tell you whether it's backed by them or not. All right. One of the things, but again, if you're not a federally backed mortgagee, etc., you're holding a mortgage, it's up to your lender or servicer whether they're going to offer you forbearance or not. So you can call them directly, look at the correspondence you're going to be getting. One of the things that sort of happened as a result of the last mortgage, housing crisis mortgage meltdown, is that when you stop paying your mortgage, the servicing companies and lenders send you a lot of information. Okay, they immediately send you like a request for mortgage assistance package and give you information. So they're really, and that's because people didn't know, they were hoodwinked, they complained, they weren't very clear before, the lenders, etc. So as where we are today, there's a lot of improvement in that communication. So if you stop paying your mortgage, you've missed a mortgage payment or longer, you're going to get a lot of stuff in the mail, and that should tell you your options being offered to you by your servicer or your lender. So please keep that in mind. All right. Now, be prepared to answer some questions. So you don't need to provide documentation to prove financial hardship at this time, but your servicer may have some questions to determine how much assistance they will offer you. The Consumer Financial Protection Bureau, CFPB, suggests be prepared to answer the following questions: why you can't make your payments, is the problem you're facing permanent or temporary, what is the current state of your income, expenses, other assets, including money in the bank, are you a service member with permanent change of station orders? That, of course, always for if you're in the military and you're having to relocate, and that's going to cause a strain, or you got to move today, but you haven't sold your house and can't make that payment. That's where they take stuff like that into consideration. All right. Consumers should indicate they have had a hardship due to the COVID-19 virus, and they should ask how long for a forbearance they can qualify for, as well as what their options are at the end of that forbearance period. The CFPB recommends get your forbearance agreement in writing. All right. They stress that any borrower who has received private mortgage payments should get their agreement in writing, which is most appropriate. Once you're able to secure the forbearance or another mortgage relief option, ask your servicer to provide written documentation that confirms the details of your agreement so that you're clear what the terms are. So a lot of times this didn't happen, or we're talking on the phone and the rep on the other phone's telling me something I don't hear properly. I'm only hearing what I want to hear, or vice versa. And you get a plan, or you get some terms that you weren't aware of or didn't agree to. So that's why everything in writing is important. Having the agreement in writing will protect you if there are errors in your mortgage statement or your credit report, because part of the forbearance agreement is that they've put a temporary pause to your payments, and therefore you shouldn't get negative credit impact for that pause. So just something to be aware of. They say watch out for balloon payments. Now, this goes back down to the forgiveness. Forbearance is not forgiveness, all right? When a borrower has secured a forbearance agreement for their service from the servicer, they should discuss the repayment options. So you don't want to surprise like 6 months or a year down the road that guess what? You owe this money, all right? All the payments are due at the end of forbearance. Because we all know if you need a forbearance agreement now because you have a lack of income or loss of income, how are you going to get, if you have a 6-month forbearance agreement, how are you going to at month 7 have the 7th month payment ready and 6 months worth of missed payments. You're just not going to have that. That's just realism at its peak right here. So some borrowers express concerns after being offered a balloon payment option like the one that was described. The balloon payment, a borrower should pay back the entire amount owed for the forbearance period at once. While a lender may offer balloon payments as an option, there's no mandate that a borrower must repay in this manner. Okay, well, and that's the key here. So there's no mandate that you must repay in this manner, but you're going to have to repay it some way. And that's where everything can get foggy, all right? So again, forbearance isn't forgiveness. Maybe a balloon is expected unless you tell them you're not going to pay in a balloon, and they can work with you. So, but you have to initiate these things. You can't just expect that the lender's going to make these changes on your behalf just because you're entered a forbearance program. You got to know what you're doing here. Okay. Basically, homeowners can and should aim to negotiate the best possible repayment options for them. All those terms are negotiable. Be diligent, be steadfast, and try and stand your ground. But also, that's a very open-ended statement. Things are negotiable, but to a limit. And what I mean by that is, you may think that, oh, please spread out my 6 months of payments over the remaining 25 years of my loan. And they may say, that's not appropriate for us. We need it spread out over the next 2 years. Okay, lenders' hands are tied. The way their loan pools are created and the way sort of the financial world works, they can't just put all your payments in the back, or make, like, you know what I mean, or what your numbers or the homeowner's numbers make sense for the homeowner does not always make sense with the lender. So that's the thing. That's my big emphasis. That it's not blanket, do whatever the heck you want and whatever you want. It's got to work on both parties' ends. It's got to be a meeting in the middle here. All right. So please be aware of that. Alternatively, a borrower. So there's no mandate the borrower must repay what they owe in a mispayment one balloon payment for forbearance, but there's negotiation. Alternatively, a borrower may also be offered the option to amortize the balance they owe over the life of the loan. This means they would repay a portion of their balance owed in addition to the usual monthly payments. So that means if anything is amortized, whether it's over the life of the loan or a short period of time, your monthly payments are going up. So realize that once the forbearance is over, you're into your normal monthly payment plan, okay? And now what you missed is going to, it's going to increase your payment. That's the point. You're not going to be able to walk in and go, well, I owe 6 months or 12 months, but I can't even make my payment. I need to pay less. I don't get it. Well, see, that has to work that way. So my point in all this is where the market will trip up. Okay, even though that the government's supporting this and the servicers are supporting this, all these great things, this is where stuff is just not going to work out for certain people based on their own personal financial circumstances, and that's the way it's just going to be. All right. So basically, a borrower can request information on who owns their mortgage note, since the owner might be able to provide more relief options. Again, your servicer could be, SPS, Special Portfolio Servicing, but your underlying loan could be with Bank of America, for all I know. All right, so there's a servicing entity and your underlying loan. What this article is saying, that you could have options directly with the bank. All right, if you're still in financial trouble after the forbearance, consider a loan modification. Well, too soon to tell whether 12 months of forbearance will be enough assistance for those who are among the millions of Americans who've lost their jobs in recent weeks. The most beneficial option if the borrower might be to work out or impacted for an extended period of time is to request to modify the loan at the end of the forbearance. This is typically what's going to happen. This is why I say this is how that's going to play out. All right, based on personal experience of seeing clients have all these issues. They didn't pay, they had a forbearance, or they didn't pay, they went into a loan modification, and for whatever reason, income was still lower or not there, so the lenders sort of ran out of things they could do. I need you to pay. Well, I can't pay. Well, you've had a break, for so long. We need to do something here. Well, I can't afford it. I can't do it. Well, then their alternative is to put you in through the foreclosure process. So my point is, this is where a lot of this may go, because we don't know how long this is going to last. And we've got some people are saying V-shaped, bang and bang, we're gonna have a quick hit and a quick recovery, everything will be great in the third quarter. We don't know that. All right, most people are saying this is going to take longer than we think, and it's going to be longer for this virus to hash out, and there'll be more and more impacts when people's forbearance runs out, and that's what I personally believe. And this is how it'll happen. Like, there's only so much that servicers and the government can offer and can do, and then it's like, we have to go to our next available option, which it really is, filing for foreclosure. at that point in time, what does a homeowner have? Homeowner can do a short sale. Homeowner can sell their home if there's equity. So the homeowner still has options afterwards. But still, I mean, it's just, again, the forbearance is not forgiveness, and having the money sort of, zoom away here. So, yeah, unlike a forbearance, a loan modification involves a permanent change to the details of the mortgage. This can include adjusting the interest rate, extending the duration of the loan, or deferring the amount owed until the end of the loan as a separate lien. So again, that's all going to be subject to lenders' terms and conditions and the terms and conditions of your loan. So I just wanted to say that, this is, please read the article if you want. I mean, I just did some highlights here, but again, all I've been talking about forbearance is be wary of what's out there, be informed, you're warned, get stuff in writing, understand what can happen in the future. As we keep saying, it's not forgiveness, it's a temporary pause to the payments. Some people will need it, some people don't need it. If you don't need it, don't encumber the system. There's more information here, like lenders are getting swamped right now. Their call center times have increased because there's so many people who are calling about this. Their call abandonment rate. So if you operate a call center, and people who are out there know about this, that you look at how fast you picking the phone up, how quick are the calls being handled, what's my how many minutes in queue are people waiting, and then what's called call abandonment. So in other words, I'm waiting and waiting and waiting, and I go, oh, the heck with it, and I just hang the phone up. That's an abandoned call. So how much of that's going on? So we see call times are longer, we see call wait times are longer, we see call abandonment has increased because they're receiving a huge amount of calls right now, the lenders and servicers. So again, please keep that in mind if you're going down that path. But basically what I'm trying to do, as I said earlier with my new tagline, is putting the realism back in real estate, is that when you take a look at information that's out there, and everybody will have their own spin. So you just have to pick out what's the right spin for you, or you have to hash through the spins and go what makes sense, where the market's going to play out, how the market's going to work, etc. So from my perspective, the lenders will be under stress, homeowners will be under stress. The relief is great for a period of time, but if you're not gainfully employed now, and we think this is going to go on longer and longer, what's going to happen? Well, guess what? You're not going to have as much money as you think you will at the end of the forbearance plan, which means you're going to have to go into some alternative plan. And where I think a lot of what will happen to a lot of people, the next phase after forbearance is probably where they're going to get hurt. They're going to go, I can't afford that. I still can't pay you in the normal monthly plus having the additional payments I missed on top of that in some capacity. That's where we're going to find the issues are going to happen, and some loan mods may not work, some workup plans may not work, and that's where we're going to see the market pick up with respect to foreclosure filings or distressed properties, things like that. So anyway, that's it for today. Appreciate the views, likes, and the comments. As I mentioned, if you're not already a subscriber, please click the bottom right button there and subscribe to my channel. It helps it grow, and I appreciate that. Also, with respect to my Facebook page, okay, again, I want to clarify this one more time, not moving away from this medium. This is my favorite medium. I like YouTube quite a lot, and the Facebook really is going to be for having shorter videos, more Q&A, talking about other things, getting involved in more detailed real estate things than I can talk about here, in 20 minutes to 30 minutes. That's the scoop. So anyway, thank you very much. You guys should look forward to another video coming up shortly, next couple days, which will be a rehash of the news that's gone on the past few days. Thanks very much.